Okay, before starting the income and expenditure account, let me explain you some things. In the receipt side, you will find the capital income, the capital receipts as well as the revenue receipts. But when you are doing income and expenditure account, the receipts will come on the income side. But you are supposed to take only revenue incomes. Revenue incomes means the incomes which are going to repeatedly you are going to get every year, every time. Those are said to be revenue. The capital incomes means only once you will receive. Such incomes are not treated as revenue incomes unless and until if they provide you something in the adjustments or additional information, then accordingly we have to move. But in general, we are not supposed to take the capital incomes. In the same way, on the payment side of receipts and payments account, we will find the capital expenditure and revenue expenditures. Revenue expenditures are those expenditures which are repeated in nature. Such expenses will come on the debit side of the income and expenditure account under the expenditure column. It comes. So that means only repeated expenditures, not the expenses you are going to spend for one time. That is long-term purpose. Suppose you are buying furniture, you are going to use it for several years. So you cannot treat such amounts as an expenditure of particular year. That you have to remember. Now let us see in the sum. Receipts and payments are given. Here we will find two balance. That is the balance of cash asset. We cannot take it we cannot show in the income side. Subscriptions means every year we receive. So subscriptions we are supposed to show on the income side. But before taking on income side, there are certain adjustments regarding subscription. Outstanding subscription on 31/3/2019 rupees 1500. Current year subscriptions you have to add, previous year, next year you have to minus. If any subscriptions are related to previous year or next year, you have to make them minus. Current year subscriptions you have to add. I have shown it in the working notes. You can see the working notes. Subscriptions received during the year, I have written there 70,000, and outstanding subscriptions for the current year, that is 31/3/2019 1500, total is 71,500. The same amount will show on the income side as by subscriptions in the amount column 71,000 we are showing. So now the next one is, here we are having one more thing. Here you can see the next item is donations received for mineral water. This one we don't show. Donations received for specific donation. So only for mineral water we can spend. That is not a regular income or a recurring income. So we can't show here in the income side. Next, the sale of old furniture. Now you have to check the sale of old furniture. If it is a benefit, if you made any profit, then you can show on the income side. If it is loss, means you have to show on the expenditure side. There you can see value of old furniture sold rupees 45,000. Value, that means the value of 45,000 furniture was sold for only 42,000. That means it clearly shows that you sustained some loss. That loss we have to show on the debit side like this. To loss on sale of furniture, the amount is 3,000. There in the working notes also it is shown loss on sale of furniture 45,000 minus 42,000, 3,000. Now comes here the next one is to interest on investments. Interest on investment is a recurring income. So it comes on the income side as by interest on investments. The amount is 10,200. Now we will concentrate on the payment side. Salaries. Salary is a recurring expenditure. So you have to show it as an expenditure. Two salaries. The amount you have to show it on the amount column as 20,000. Fixed deposits, they are your investments. Investments can't be shown because it is not a expenditure. You are investing, you will get your amount back after some time along with the interest. So it is not an expenditure. Then furniture. Furniture is an asset, fixed asset. It is not a revenue expenditure. Shares purchased, you are buying shares in a company. That means you are investing. Your investments are not the expenditures. That means they are not revenue expenditures. Buy stationery. Stationery is a revenue expenditure. So to stationery, the amount is, we are showing on this one 20,000 on the amount column. Then general expenses, are the expenses in general, that is recurring one. So you have to show it in the expenditure side as two general expenses, the amount as 6,000. Now once these are over, now we have to see that which side is more, debit side or credit side. Income side is more, that income side is 81,200, whereas on the expenditure side 49,000 you are having. So let me add first income side, that is total of income side, we will add it first. So 81,200, both sides the same amount will be written. Now the balance if we are getting on the expenditure side, that means income is more than expenditure. So we are getting surplus. So we write down 2 surplus. You can even write down as excess of income over expenditure. And the amount is 32,200. Only one main thing you have to remember, how to calculate subscriptions. Subscriptions received during the year 70,000 from the receipt side. Then in the adjustments, you have two adjustments. The first one is outstanding for the current year, and then advance received also. Anything advance received minus, current year add, previous year also minus. So first I added the outstanding for the current year 1,500, 71,500. From that one I deducted the subscription which is received in advance, that is 500. So in the income side, we will take only 71,000 which belongs to the current year. That is very important. And furniture also, you can see that the sale of furniture, whatever furniture is sold is amounted 42,000, but its value is 45,000. So it clearly shows that you sold for a loss of 3,000. 45,000 minus 42,000. That 3,000 we show it on the expenditure side as to loss on sale of furniture. This much you have to remember.